All right, y'all, back to work. Weekend is behind us, and markets just gapped up to start the week this week. And wait till you see these charts tonight because I have a beautiful gap fill strategy setting up for tomorrow. I want to cover entries, I want to cover exits. More importantly, I want to make sure that you have a game plan to make some money in this gap fill along with us tomorrow morning. So, charts are ready. Enough of the intro. Let's not waste any more valuable time. Thanks for tuning in and watching my videos. Let's dive right in now and make some money on Tuesday morning. S&P SPY ready to go tonight. NASDAQ triple Qs are always ready. I have four very simple but very important clues that are telling us where the money is made tomorrow morning. One of those four clues is right here on the hourly time frame. I like to use the hourly chart as an overall directional filter. It's pretty easy to see right now on the hourly. The buyers are in full control right now in the S&P SPY, full control right now, the NASDAQ triple Qs. The first of four clues for tomorrow is we know the buyers are in full control of momentum. Second clue is over on the calendar for tomorrow. Tomorrow we have a lot of news. And no, I don't really care about J Powell at 9:30 Eastern time. We heard plenty from him last week. My focus tomorrow, though, is this block of news at 10 o'clock Eastern time, specifically the ISM Manufacturing Index and that JOLTS report. We know manufacturing is on everyone's radar right now because of Trump's attempt to bring all the manufacturing back to the U.S. through tariffs. So we know ISM Manufacturing will definitely be something will move the needle tomorrow morning, but JOLTS. We talked about this last week. The one thing we heard repeatedly from Jay Powell's testimony last week was how important the jobs market is. Tomorrow morning, 10 o'clock Eastern time, that JOLTS report will probably give us a jolt of price action. That is the first of three big jobs numbers this week. ADP on Wednesday and a rare Thursday non-farm payrolls. We get some big news coming later on the week, but for tomorrow though, that JOLTS report, that ISM Manufacturing, be aware anytime we have Red Star news at 10 o'clock Eastern time, you best be paying attention. That is our second clue out of four clues for tomorrow. Third clue is down on some tick charts. Remember, I like to use the hourly chart as a directional filter, but I would never want to trade off an hourly chart or a time chart altogether. These charts are tick charts. We always trade tick charts because tick charts make entry timing a whole lot easier. And because timing entry is one of the most important factors, we always use tick charts. Upper left-hand corner, that is a 7,000 tick chart there. And if you're watching for the first time right now, welcome to the channel. That yellow line right there is the only indicator we need to make money each day. That is the 21 EMA. There are two more important clues right now on these tick charts. The third clue overall is that gap down there. They almost filled that gap over lunch this afternoon. They gapped up over the weekend, didn't fill the gap, and that gap down there at 62.20 and 3/4. There'll be something similar on the NASDAQ. We'll grab that in a moment, but you know that gap wants to get filled. Usually when gaps happen over the weekend, they're going to get filled before the end of the day on Wednesday. So hopefully that gap fill will happen tomorrow. But arguably, the most important clue right now is this range we have up overhead. This will be called a directional range. It's a big move up into a trading range. Now, why would a range be important? Well, because ranges love to rotate down, up, down, up, down, up, back and forth. And because this is an overall bullish market, we know there's more likely now for a breakout going higher as the S&P and SPY keep trying to work their way up to those all-time highs. Now, I like the idea of a breakout because we do have some separation off that moving average right now. I like the idea of trading breakouts right now. In fact, I have three breakout trades on my radar for tomorrow. We'll cover that a bit later on in tonight's video. But I would say my favorite trade for tomorrow is if you understand how ranges work, and I teach this in a lot more detail in our free video classes, the amount above the range, the amount below that range. Look where that pendulum swing, look where that symmetry puts us. It puts us right down around that gap fill. So I'll tell you right now, my favorite trade for tomorrow is I would love to finish off this rotation. I would love to look for a bear trap down here. Wait for price to pull back to the 21 EMA and let those bears chase after it. Once, higher high, twice. Now, once those bears are stuck short, now I can use their stop losses to fuel that rotation, right? Because remember, ranges, they want to rotate back and forth here using pendulum swings, using triangles. I love the idea of buying a bear trap off that gap fill, off that pendulum swing, and running this thing back up into that range. Now remember, ranges love to rotate. So as we start rotating higher, we do not want to let our foot off the gas pedal. This is where we start adding to our winner. To add to your winner, and first of all, adding to your winners is the easiest way to make your account grow a whole lot faster. It's a bear trap down here, but now we'll take our 1-to-1 first target and now look for this add-on pattern. A very simple adding to my winner pattern starts off with separation off the moving average. Look at separation as the pullbacks, right? The pullbacks don't quite pull back all the way to the 21 EMA. If shallow pullbacks are above that moving average, that's a separation I want to see. Then higher high in price. I'm looking to get in now, add to my winner now, right below that low. In our trade room, we call this a bear trap into an add-on. Bear traps, add-ons. Now, where's the market trying to go right now? It wants to go where? Back up to the side of that trading range, but more importantly, the amount below, the amount above, that will tell us now where to cash that big paycheck on that gap fill, bear trap add-on going back up to retest that high. Now, here's a really important question. What if we don't get the bear trap down here? I mean, these markets, they've been going higher for it seems like a month now, the past few weeks here. We may run lower here. And there may be so many buyers down here, we may not get the chance to trap the bears in and squeeze those stops. This thing may just whoop and run right back up again. If it V-bottoms off the low, remember, whenever markets bounce hard off the low with basically we call a V-bottom, I make a very small adjustment. I draw a trend line off the highs. I bring that trend line down around that low. That creates a new channel. Now, here's the magic happens. I don't want to chase after it buying high. I want to buy low. And in my experience, these are some of the most consistent winning trades we find in our trade room. So again, I want to get that bear trap down there. But if it bounces, whoop, and runs right back up again, watch this price begin to grind higher, find that new channel, and whatever you do, do not miss. The first test is the best test off the low of that channel. Now, this could be any of the entry patterns you guys are learning in our free video classes. It could be a bear trap. Look, I'm showing you here. Oftentimes, this gets right below that 21 EMA. The bears get trapped for a bear trap below that 21 EMA. The bottom line, though, is I want to get that first touch. That first test is always the best test off of that low. Love those V-bottom trades in our trade room. And then one more thing, too. We've had a very big run the past few weeks here. I would not be surprised at all if we saw a really big slip and fall going lower, get a bear trap down below that moving average. I would not be surprised at all if we saw a nice pop going higher. Remember, ranges, they love to use breakout pullback. So every once in a while what happens is we'll get that bear trap down here, but now we're not going to get that roll back higher again. We'll basically get a breakout pullback off that range and it will retest that low. Now we call these retest trades in our trade room. I'm going to warn you right now, this will feel like a reversal, but it's not a reversal. It's a big bull market right now on the hourly time frame. If we see a retest trade tomorrow, basically a double bottom retest here, I'm going to do the exact same thing once again. Bears once, bears twice, trap those bears in, and again, the market now wants to rotate all the way back up again. As it rotates higher, what's the game plan? Yes, add to that winner. And again, that separation off the moving average, the higher high in price. And I'll tell you right now, these retest trades can often be our biggest winners of the week. Runs lower, retest, bear trap, add on. You better leave that runner backed up to that recent high. Now, I want to talk about going higher here because, again, we got some good separation off that moving average. I have 3 types of breakout patterns going higher. Before we dive into those, though, let's slow down for 2 seconds real quickly because I know most folks watching right now, you guys know these patterns already. You're making money with these already. But if you're watching for the first time right now, this might be a brand new strategy for you. Don't you worry, though. I teach this entire system, all the entry tactics. I teach everything in my free video class. The markets are way too good right now not to be making consistent profits. So I want to help you guys make money with this stuff. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up right there and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. You will laugh when you see how simple that technique is. More importantly though, guys, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more consistent profits. Guys, if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, hit that link that popped up right there. Watch that free trading course because everyone loves all the trade examples I include in that short video series. The best part is it's 100% free for you. Also be aware too, folks, I'm going to put all the important links you need, especially the free course links. I'll put all the important links you guys need to learn this strategy down below this video in the description of the YouTube video. Start first with that free video course. Most folks start making money all on their own, all from that free video series. So definitely start there first. You're going to love that free video class. And don't forget too, guys, I post a ton of charts and videos and mindset stuff on Twitter or X, as they call it these days. If you're on the X platform, give me a follow. Again, all the details you'll need to learn the roadmap, hopefully earn a lot more because of it. I'll put all those below this video tonight in the description of the YouTube video. So now you know where to go if you're watching for the first time right now. Definitely start first with that free video course. I want to talk about now going higher here because, again, I got 3 different types of breakouts going higher here. Before we do that though, what if we don't get that full pendulum swing? You know, here's one question I have for you right now. I would not be surprised here if all we got was a little bit below that 24 level. We got some higher highs in price right now. So technically, buyers will enter below that 24. Again, I want to go all the way down, take out that pendulum, even take out that channel down there. I would not be surprised at all. I would not be upset at all if it really bloodbath there, right? And then back up like that. If we don't, all right? If all we get is a shallow pullback right now, maybe it's off that swing right there. Maybe it's off this channel. If all we get is a shallow pullback right now, I'm going to make one small adjustment on the buy going back up again. I'm going to now look for what we call a technical bear trap in our trade room. It's bears once, it's bears twice, it's a higher high in price, and a move right below that low. The reason why I make this small adjustment, and the goal is to buy underneath that prior swing in between. The reason why I do this is because of risk reward ratio. You know, for example, if I see a nice deep pullback right now, my risk versus reward on a bear trap down here, my risk reward ratio is pretty darn good. I can risk small, take a much larger amount of reward. That trade is very attractive to other types of traders. And because of that, I can be a lot more aggressive on that entry. But if all we saw, if all we saw was a pullback to the low of that channel, right? Or if all we get is a little tiny shallow pullback that barely fills that gap right there, I don't want to go 1, 2. I don't want to buy like this, right? That risk reward ratio is not that great in my favor right there. So on a shallow pullback, it's always important that we wait for 2 tries, because again, I want to trap those bears in, but it's so important on a shallow pullback here, I get below a prior swing. Anytime I'm trying to buy relatively high or I don't get a real deep pullback like that, the best way to do this is, again, higher high in price, get underneath that prior swing in between, take that one-to-one first target, get rid of that risk, just like I teach in the free video course. So a small variation of that right now is, again, if we're shallow pullback, you want to buy right below that low, that technical bear trap, like I teach in the free video series. All right, now we have a good game plan. If we roll lower, how to trap the bears in, if they retest on the retest trade, and if all we see is a shallow pullback, we know the game plan for that tomorrow. Finally, I have 3 breakout trades going higher here. We have to be a bit careful on the breakouts right now because we're so high up right now, right? We're almost at all-time highs right now. I don't want to buy too high. Let's talk about breakout patterns right now over on the NASDAQ. NASDAQ's getting lonely over here. NASDAQ has already taken out its all-time highs. Now, before we dive into the tick charts right now, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days, and I appreciate you guys tuning in and watching my videos. So as always, thank you guys so much for all the support, all the likes, the subs, all the love I get in the comment section below. As always, thanks for tuning in tonight and watching these videos. Now, let's roll sleeves up and talk NASDAQ on our tick charts. Again, I like to use the hourly time frame as an overall directional filter. Don't get too far into the weeds on the hourly time frame. It's only used as direction. The most important clues right now are here on the tick chart. Notice a 4,000 tick chart, upper left-hand corner. NASDAQ is not as liquid, not as much volume as the S&P. Look at the gap right there, right? That gap is begging to get filled right now. Gaps are psychological price magnets. I'm sure most people know that already. But my favorite clue, though, is that range right there. And again, ranges, they love to rotate back and forth using symmetry. So you'll notice I've marked up the amount above the range, down below that range. Combine that with that gap down there. And again, this is why I said earlier in the S&P, I love the idea of a run lower, fill the gap, complete that pendulum swing. And you know me, right? I'm not going to blindly buy down there. What I'll do is I'll wait for price to pull back. I'll use those bear traps or some variation of the bear trap I teach in the free video course and look to squeeze those stops running back higher. We'll look for that separation off the moving average. We'll look for that add-on entry. All the same techniques we talked earlier about on the S&P can easily be applied right now going higher here. The retest trade, double bottom retest trade, all that stuff we mentioned earlier on the S&P can be applied here right now on the NASDAQ. Now, what if we go higher here though? Our biggest problem right now is we're pretty high up right now, right? I don't want to be buying as we go higher here, at least not at this situation because we're so high up on the hourly chart. What I remember is as we go higher, you have to remember one thing for sure. In a range environment, anytime we see a range breakout, the breakout leg is always a measuring leg. So right now, if all we do is go higher right now we know the breakout leg and that measuring move leg, now we know pretty much where this market now wants to go. It's very difficult for me to justify being a buyer though right now before we take out that measured move. One of 3 trades I'll look for tomorrow is if we do wind up going higher here now we know that range below us is begging for a breakout pullback. Again, there are 3 types of trades if we go higher. The first of 3 trades is a breakout pullback. Now, when I say breakout pullback, 2 things about breakout pullbacks. One, look left and find some of these prior swings. Right now, we'd have to get a pretty big breakout to want to use that high right there as a prior swing. But again, imagine now using what was resistance as an area of support. It's the first thing when it comes to breakout pullbacks. The second thing when it comes to breakout pullbacks is a 2-legged pullback. 2-legged pullbacks are my favorite technique to trade a breakout pullback. What I mean by that is imagine 2 legs, A, B, CD. My favorites out of these are a bit more than a 100% measured move, right? So imagine now a measured move, A, B, C, D. My favorites on these, though, go a bit more than that measured move, that 100% A, B, C, D. The goal, though, is to see that nice strong run going higher. I'm not going to buy it as it goes higher. What I'll do is I'll look left, find some prior swings that line up around that ABCD, that two-legged pullback. And again, as always, I'm not going to pick a bottom on this. What I'll do is wait for price to pull back on that two-legged pullback, then wait and see what happens at the moving average. As we pull back to that 21 EMA, let those bears, let them dig that grave. Let them wrap that rope right around their neck. The easiest money you'll ever make in trading is trapping traders and using stops to run stops and basically fuel your profit target. So think about what's happening right now. We're overall bullish, nice strong run going higher. Then we see a two-legged pullback, one leg, two leg, a bit more than a measured move. Ideally here, we're now using what was resistance now as support. It's a bear trap off that moving average. The same pattern I teach in the free video course. And again, as we go higher now, the market now wants to go where? It wants to go back up and take out that high. So as we make our way back to retest the high here, I'm always looking for ways to add to my winner, separation off the moving average, higher high in price. I want to get in now, add to that winner. Or if you miss the bear trap, this is a last call chance right there to jump in before we go back up and retest the high. It's a breakout pullback, right? It's a breakout pullback. It's a measured move. It's a two-legged pullback. It's a bear trap, an add-on, and back up to take out that recent high. That would be a very easy trade for us tomorrow morning in our trade room. Another thing too is that every once in a while, remember markets are all juiced up right now because of trade deals, because of tax deal this week. If we keep grinding higher, let's say we push higher here right now. We start grinding, going higher here. This will look a lot different than that breakout pullback I showed you a few minutes ago. If we start grinding higher here, remember, anytime we see a market grind like this, all we do is draw a trend line off the highs. We bring that trend line down around those lows, right? Find that channel. And all we do now is look left and find prior swings. My goal is I want to get in on a popping grind breakout like this. I want to get in under prior swings off the first touch. Again, very important. The first test is always the best test of that channel. And again, I will try to use what was resistance right now. I will try to combine that as an area of support. These are, there's not many guaranteed winning trades in trading, but these are almost guaranteed winners. Because again, anytime price pops and grinds like this, grinding trends are very strong trends. We find that new channel. I want that bear trap. And again, I'm keeping things simple right now because we're here on YouTube. I have a lot more examples of these inside the free video course. Imagine now we get below a prior swing, below the 21 EMA, bears get stuck trying once, trying twice. We juice those stops, run those stops, and back up again. Now here's something cool about a pop and grind channel, right? Pop and grind breakout. Remember, the breakout leg is the measuring leg. So one small adjustment here, if we pop up and begin to grind going higher now, we know the size of the breakout leg. Now pin that leg down at the lowest part of that pullback, and that now will tell you where that measured move target is going to be. Makes sense, right? Pretty simple, right? Again, the breakout leg is the measuring leg, breaks out, grinds going higher. We get below prior swings around the low of that channel. First test, best test. It's a bear trap. It's an add-on, right? Going higher, same stuff. Bear trap add-on. The key though is the breakout leg. Once we know how deep the pullback is, then we know where that final target will to cash that big paycheck. That's our second trade going higher here. A pop and grind breakout. First test, best test, bear trap. off of that low. And the third and final trade, if we go higher here, is really one of the easiest ones to make money with. We may pop up, we may take out that measured move, and we may start going sideways into a new trading range. Now, I say this is the easiest one because why? Ranges, first of all, ranges are magnets. So they anchor price going higher. What else do we know about ranges? They love to rotate, right? They love to rotate down, up, and again, the amount below, the amount above, the amount above, the amount below. We use symmetry back and forth in that trading range. Now, think about this. If this range back here, if that wants to be a breakout pullback, and the range above us is a magnet and it wants to rotate, yeah, these are why these are some of the easiest ways to make money. We call these stacked ranges, right? Ranges stacked on previous trading ranges. So now again, remember, this previous range, that's a level of support now. Wait for the breakout going lower. Do not confuse this with a reversal. Again, use the hourly time frame as your overall directional filter. Right now, the buyers are in such obvious control right now. Again, these will feel like a reversal, but they're not. This is the faster time frame. This is the tick charts. We find entry patterns of tick charts. We use the hourly time frame for direction. Same thing as always, right? Wait for that pullback. Let these bears get trapped in and squeeze those stops. I have tried repeatedly over the years to find indicators, divergence, tape reading, order flow, all kinds of techniques that don't work very well to time entries. Time and time again, I try new ideas. I always go back to what works the best. That is bear traps, bull traps. In this case, it's a bear trap. One try, two try. Run those stops. And remember, in this case, rotation is your bread and butter, the amount below the range, the amount above the range. Now we know where this market now really wants to go, going higher here as we now rotate. Again, I want that separation off the moving average, the higher high in price. And man, oh man, if the trading gods are watching down on us tonight, they'll give us something like this tomorrow, because these can be very lucrative trades. In our trade room, we take some off at the top of that range. We always leave that runner for that pendulum swing on the other side of that trading range. And again, remember guys, if we go to range up here, if we range like this, remember, same thing, right? They run down, they pop back up, V bottom. The same entry tactics we talked about earlier on the S&P, I can always use those variations on the NASDAQ or any market that matter, right? In the range here, so a V bottom works fine by me, right? A retest trade works great on these as well, right? Strong run down. We may not get the bear trap down there. It may pop up, retest back down again. Again, retest trades are always on our radar. Bears once, bears twice. Double bottom retest, back into that range above. Keep using that new range as a magnet. Keep using that previous range for a breakout pullback. And hopefully, though, we'll get that nice big pendulum swing, fill that gap, trap some bears in, and make some money on that beautiful bear trap tomorrow morning in our trade room. Right, guys? That's the game plan for tomorrow morning. Now, speaking of tomorrow morning, the place to be is in my trade room. 8 o'clock Eastern time. Guys, the easiest way, start making money in these markets, come out and learn along, trade along every morning at the opening bell. Again, I'll put all the important links you need to learn the entire strategy. I'll put everything below the video tonight, description of the YouTube video. Start first on that free video course. You're going to love all the trade examples I include in that short video series. Then come join my trade room and we'll do it together every morning at the opening bell. In the meantime, guys, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.